So let's talk about JPMorgan Chase. They're the undisputed king of global finance, and they just had the most profitable year in the entire history of American banking. It really looks like an unshakable fortress. But, the world is getting more volatile by the day, and a siege is definitely coming. Today, we're asking a big question. Can even this titan withstand what's next?
Let's just start with this number because it's just staggering. $57.5 billion. That was JP Morgan's net income for 2023. A figure that doesn't just break records, it completely shatters them for any American bank.
And look, to be totally clear, this wasn't just a good year. It was literally the most profitable year any American bank has ever had. This is the absolute peak, the very top of the mountain.
And that's what makes you wonder, right? When you're sitting on top of the mountain, is the only way down. With all this geopolitical tension, recession risks, tech disruption just swirling around, we really have to ask if this fortress is truly as impenetrable as it looks.
Okay, so first, let's really dig into what makes this fortress so formidable, the sources of its dominance. Well, it all starts with just sheer financial firepower. That historic profit we talked about was built on a mountain of revenue, $185 billion. This isn't just a bank, it's a full-blown financial empire. But its dominance isn't just about size.
You see, JP Morgan's real core strength is that it excels everywhere. It's not a one-trick pony. Unlike rivals who might be amazing in one area, JPM is a powerhouse in all of them. From your local Chase branch to the biggest deals on Wall Street, from managing trillions in assets to commercial lending. This isn't just diversification, it's coordinated dominance.
And get this, they are not resting on their laurels. They're outspending pretty much everyone on the future. Their tech budget is approaching $20 billion. And a huge slice of that, over $1 billion, is aimed squarely at artificial intelligence. This isn't just some investment. It's a declaration that they plan to win the future of finance. And they're building this deep, deep moat against any of those nimbler fintech challengers.
But, no fortress is perfect. Now that we understand its incredible strength, it's time to start looking for the cracks in the armor, the internal vulnerabilities.
For all its #1 rankings, all the trophies on a shelf, there is one prestigious title that just seems to consistently elude them. A key area of Wall Street where they're still looking up at their fiercest competitor.
Yep, in the super high-stakes, high-prestige world of mergers and acquisitions advisory, Goldman Sachs remains king. Now, JP Morgan's management knows this is a weak spot, and while they are pushing hard to close that gap, it's still a rare blemish on an otherwise dominant record.
Okay, the second crack. This one comes from a huge, and I mean very public bet. JP Morgan is doubling down on the American consumer right at the exact moment their financial health is becoming more and more uncertain.
So here's what happened. They bought the Apple Card business from Goldman Sachs, instantly adding over $20 billion in credit card balances. But here's the critical part. They also had to immediately set aside $2.2 billion just to cover expected losses. That is a crystal clear signal that they're taking on this risk just as the credit cycle is starting to turn sour.
Now, these internal cracks, they become much more dangerous when you consider the storm that's brewing outside. We're zooming out now from the bank's own issues to the huge macroeconomic and geopolitical threats that could really challenge the entire financial system.
And hey, you don't have to take my word for it. This warning comes directly from the man at the top, CEO Jamie Dimon. He sees a recession on the horizon, and that is a major, major threat to any bank's bottom line.
And compounding that recession risk is this massive number. Nearly $8 trillion in commercial real estate loans are all coming due in 2024. With office vacancies high and interest rates way higher, many of these loans are going to be impossible to refinance. That could create a wave of defaults that would ripple through the entire banking industry.
And then finally, there's just the state of the world itself. Dimon has called this the most dangerous geopolitical environment in 80 years. From the war in Iran driving oil prices sky high to just broader global instability, the risk of a sudden systemic shock is exceptionally high right now.
It's a terrifying picture. It really is. But here's the twist. For a bank with the scale and the sophistication of JP Morgan, chaos isn't just a threat. It can also be a massive opportunity.
So let's explore how JP Morgan is uniquely positioned to find these silver linings. How can this fortress not just survive the storm, but actually come out of it even stronger than it was before? First, we go right back to that AI budget.
This isn't some research project, okay? They are rapidly deploying AI to build better risk models, create smarter trading algorithms, and fight fraud way more effectively. They're aiming to double their production use cases within the year. They're building a structural advantage that will be almost impossible for smaller rivals to ever replicate.
And what about all that geopolitical chaos we talked about? Well, for JPMorgan's massive trading desks, volatility is profit. It's fuel for the fire. When markets swing wildly, their traders get to work. And we've already seen this in action. Their equities trading revenue surged 40% in a single quarter as global tensions rose.
And just as all these storm clouds are gathering, it looks like a major hurdle is about to be removed. Upcoming changes to banking rules are set to free up an estimated $110 billion in capital for the biggest banks. This gives JPMorgan even more firepower for acquisitions, for lending, or just for rewarding shareholders.
Okay, so we've seen the fortress, we've looked at the cracks, the coming storm, and the surprising silver linings. So where does that leave us? What is the final verdict on the future of the world's most powerful bank?
Well, ultimately, it all comes down to this core conflict. On one side, you have the fortress, record profits, a massive tech budget, and a balance sheet that's built for any storm. And on the other side, you have the siege, recession risk, geopolitical chaos, and the relentless pressure from a whole new threat, those smaller, faster fintech disruptors.
And that leaves us with the ultimate question, doesn't it? JPMorgan Chase is a $720 billion Goliath. Its size is its greatest strength, giving it the resources to outlast any storm. But in an era where speed and agility are everything, could that same immense size become its greatest liability? That is the multi-billion-dollar question they have to answer.